right. All right. It is 1 o'clock. Welcome, everyone. We will get started in just a minute as people start to trickle into the live stream. Appreciate everyone joining us again. I think this is our fifth or sixth week running the show. There we go. Pause that. And just excited to keep this going. I've been getting tons of feedback from people going to live events in New York and hearing from founders and VCs that they're familiar with this show already, and it's only been around for a couple weeks. So exciting to see that people are listening to it, checking it out, and appreciating the feedback. And today we're going to be mixing things up a little bit. This is something that we haven't done before, where basically I'm going to be reviewing someone's deck that I've already seen before in a private deck review. One of our premium subscribers on Thunder that leveraged a private session with me to be able to kind of unpack what was missing in their deck, what was wrong with it. And we're going to be looking at that old deck briefly, just more or less skimming through it. I'm not going to go through the whole deep dive like I usually do. And then I'm going to be looking at their new deck for the first time and kind of giving my authentic reaction. So I'll be kind of refreshing myself on the old deck, then looking at the new deck, and then we'll be looking at another company that's resubmitted their deck to basically get some additional feedback. So this one's kind of a unique opportunity where we get to look at decks that we've seen before, that we've given very constructive feedback through these sessions or in private sessions to be able to critique how they can optimize their decks, and then actually seeing what they did to those decks to take it to the next level. I don't know if they're any better. We're going to find out. But for those that are new to the show that haven't joined us before, at a high level, my name is Jason Kirby, founder and managing director of Thunder.vc. We are a platform that makes it easy for founders to identify which VCs they should be focused on raising capital from. So we use AI to identify out of 5,000 VC firms which are active, which are actively deploying capital into companies like yours. It's really easy to get set up. You create a profile and you get to see how many VCs you match with. And then you have the option to upgrade, to unlock additional features, to either download that list and all the contact information, saving you hours and hours of time, and be able to contact them directly through Thunder and a myriad of other opportunities. We also are, for those that don't know, a tech-enabled investment bank. We select select clients that we help take to market. So if you're raising, $3 million or more, you're at $1 million plus in revenue, and you're looking to stay focused on building your business and want some expertise in terms of how to package you guys up, what's going to be your capital structure in terms of debt and equity, what are the options in the market, and just more or less packaging you up to take to market. Be sure to reach out to us. Happy to share more on those services for anyone that's interested. And we basically fill any necessary gaps that's going to help you get funded. So now that the intro's out of the way, also want to kind of plug one of our partners, a company called Deco. They help build and design pitch decks. So if you're struggling to kind of either one, spend the time on building a deck, or just need some outside counsel to kind of put it all together. So you maybe have the ideas, but spending the hours and hours and hours on building a deck may not be your core competency. I recommend our partners over at Deco. You can reach out to Robert at getdeco.com. Their website is getdeco. But we'll go ahead and jump right in to our first deck. So this is going to be a deck that we looked at. Well, actually, you guys haven't seen it before. We're going to be looking at their really, really bad deck. And then we're going to be looking at their new deck, which I have not seen. So this will be a fun little exercise. So I'm going to go ahead, share my screen. Curious to, if anyone has any comments. So if you guys have comments, you can obviously engage with me on LinkedIn, on YouTube, or directly into the chat on Riverside that I'm recording and streaming from. All right, so we'll go ahead and start to share my screen. All right. Today we're going to kick things off with looking at tractor bots. Give that a moment to load. Make sure it's working. Don't want to talk to something that you guys can't see just yet. So just giving it a moment here before I get started. But to give you some context, TractorBots was a company that reached out to me back in May. They signed up for Thunder Premium to be able to unlock our consulting as well as our deck feedback, private deck feedback, as well as unlocking their matched investors to be able to kind of move forward on their fundraising strategy. That said, looks like we're up and ready to go. So this was the first deck that they submitted, to which my response, yeah, stock images, very basic, plain text, kind of value proposition, talking, really complicated tech with no demonstration of the technology and the solution. So basically, what we're going to walk through is going through this. What I first saw a couple months ago. So I gave some very harsh feedback on this. This looks like anyone could have done this, 15 years ago in their high school, class in terms of just basic text proposition. This doesn't really look compelling. It's hard to, do I really want to read all this? Doesn't really entice me. It's just highly differentiated opportunity. Cultivate, top up, charging, and force multiplier add-on. I don't even know where to start with that. I don't even know. I guess tractor bots, ground anchor, propulsion technology that unlocks untapped profit. Yeah, so it's just like total mouthful. But all I get from it is some tech for construction and farming. And basically I had a hard time going through this deck. They do kind of mention it's $150 billion market size, but they don't articulate where and how that comes from. And, it's high operational cost of what? Ground compaction reduces yields. I guess this is talking about normal tractors. Yeah, competitive with existing. Yeah, so just hard to follow. Doesn't really get much. Before they didn't even have a video, there was no material on actually what their technology did. It was just very, very early, but they had all this technology they talk about in terms of what they could do, but they didn't really dive into it. So, here they've been developing this technology for 4 years. And they have sold a subterranean unit for 250 grand. Is that relevant to what they do and stating above? So there's just nothing really exciting about this deck. And then they go into the team, which, not a beautiful, layout. And we always know I always love to see LinkedIn's. So we're going to go ahead and just jump straight into their new deck, which again, I haven't taken a look at yet. But wow, big difference. Much, much clearer as to what they actually do. So assuming this is the technology that they're building here, it's autonomous, tractorless EV cultivation. So it's electrified tractors. It's autonomous, way clearer to understand. It's an anchor propulsion tow bar. So they're kind of stating what it is. I'm not an industry professional. I don't really know what anchor propulsion tow bar means, but I imagine investors that invest in ag tech and these kind of solutions will have a better understanding. All right, so talking about referencing articles, kind of highlighting topical information. I'm not sure if these are relevant news channels for the industry, but kind of gives some idea that the labor force is a problem and solar farms having some issues. But there's raising cost and labor shortages and lack of viable sites limits growth of renewable energy. The solution: large farm implement tow bar. So they have a video you can link to. So if I really want to learn more and kind of see it in action, I'm going to just turn off audio here and kind of skip ahead. Not sure if this is the old solution or the new solution as far as what the world does today. I don't have the audio support. Okay, so this is what they're implying. So smaller tractor, I guess that means less compaction in the ground. And they can also auto plant. So it's like basically kind of highlighting what the tech does. So it doesn't look like the tech is live or exists today. Oh, look at that. So that's kind of interesting. So it has a tow complementary bar that kind of follows behind it. So, good kind of 3D model. Of course, I would love to see more of a real and product market or product and market, but this helps give me some more insights as to what they're actually doing. Good further support of how the technology works. So basically saying seed drills, cultivates. I could just imagine that this is probably cutting a ton of labor out and probably potentially reducing the costs, improving efficiencies. Okay, so I'm picking up on it. I imagine they're raising money because they need to build it, and that's why they only have digital renders. But then they kind of narrow down. They have global farm market, so it's $150 billion on machinery in general every year, but then there's about 1% of that is for agrivoltaics. I guess that's the electric. And I imagine that's growing pretty rapidly. They give me a link to click on. I don't want to read that. I rather they kind of maybe summarize. Maybe this is a little, maybe show me the CAGR. Oh, it's gonna be one. Oh, it's okay. What is it today then? And what's the CAGR to get to 2028? That's concerning. Also, just a little typo. Show me the dollar signs. It just looks a little more professional. Household risk, our tow bar enhances both existing and emerging solutions. So it looks like it's adaptable to existing solutions in addition to supporting, new opportunities. Um, Again, it's, I'm just not an expert in this field, so it's hard for me to really judge the quality of the content in some of these regards, but I'm able to follow along. Can see what they're offering here. It's a lot easier to understand. This is where they kind of shop the competitor, it looks like. Um, yeah, these numbers don't mean too much to me. I guess they're slightly cheaper. There's electricity is a lot cheaper as opposed to diesel. There's no labor, so they're saving money there. Depreciation, I guess. Basically 10-year cumulative cost is about probably, pretty substantial in terms of savings. So that's basically what they're highlighting here. In my opinion, I would just probably focus on just these details, like what's the overall 10-year cumulative cost savings from one competitor to the other. You can always share this detail in greater length for other meetings and stuff like that. But I don't understand the difference between single farm use and contractor. I guess maybe a contractor that comes and does it for them as opposed to having it at the farm. But I see now. Okay. But yeah, basically, I would focus just showing the difference between cost and savings, keeping it simple as opposed to having me navigate this, table here. You can always have the additional information in greater detail in the descriptions, but I was able to follow. I kind of get the point, but I would just like to see percentages just so I can say like, oh, you're saving them 25%, 30% over 10 years. And maybe also what's the increase in productivity or increase in revenue, I think would also be valuable to know as far as what people could expect. And then going through patent pending technology, 10-year, okay. Patent pending is always like, is it submitted? It always takes a while. It's not ever guaranteed, but, something that it's important to include as far as, potential moat down the road once it's issued. All right, so got some advantages. Reduces headcount. So these are good, like bullets, easy to follow. Much cleaner team. They forgot the LinkedIn. That'd be the only change I would have here. This one's a little bit maybe too wordy, but it's not a deal breaker. They kind of clearly identify what they're actually working on. So I think this is reasonable, and I would maybe highlight, maybe a little bit less detail, but I think this is totally fine. I would just probably have the LinkedIn so I could dive into a little bit deeper on each of the founders. Advisors, I'm always skeptical of advisors. I say this every time. If they're not like a household name, it doesn't give me a ton of confidence. But some people like seeing them just to make sure that you're able to pull these people in. But we never know as investors how likely they are to be engaged. What actually are they contributing? Are you just using their name? Do you call them every day? We don't really know their commitment, so we're always kind of take that with a grain of salt. It doesn't add too much value. So if you think that you're stacking industry professionals as advisors and giving away a bunch of equity, it's usually not worth the squeeze. Multiple use case revenue streams. I don't know. Underlying technology allows multiple use cases and revenue. Okay, gotcha. Just didn't read right. So I guess these are different ways that you can leverage the tech. Okay, here we go. Projections. That's what I was looking for. So this must be in, I guess, sort of millions. Okay. So getting up to, 67 million in 4 years seems aggressive when you're at zero right now. I'm not sure how quickly you can ramp up manufacturing. That would be a big concern. And how you guys going about manufacturing, given that this is substantial hardware and potentially software. None of that was alluded to in terms of how you guys are going to go about funding that or building that. If it wasn't here, I didn't see it. That would be a big, kind of red flag. Do you have enough capital? Like, this doesn't seem like enough capital to manufacture, produce, or are you licensing it to someone else to manufacture? Or are you leasing it? So that's like a big unknown with a business like this. But And yeah, raise it. Okay, so 11 million, that makes a lot of sense. You probably at least just to maybe build a couple of these things. But nonetheless, this deck is exponentially better than the previous one. Contact us. Sure, I'd probably maybe say who you're contacting, but you don't necessarily need a thank you slide. It's just wasting me scrolling down. Probably just end it here on the ask. Move contact information up or put it on the team slide. But yeah, I think this is this was basically a 0 in my opinion way back when, maybe a 1. This gets me closer to a 3 or 4. I just had, if you guys aren't familiar with our rating scale, you can go to the event description on our Luma page or on the LinkedIn page or YouTube, and I basically give our rubric of 0 through 5 on basically how fundable are you. 5 meaning you are ready to raise money if you haven't raised money already, and VCs should be chasing you. 4 means you pretty much are dialed in there. You just might have a little bit more work ahead of you. But that's the rubric 0 to 6. So this one I give closer to like 3.5, 4. I think there's some pieces here that are interesting. I think for a qualified investor that's very familiar with this type of technology and investing in these types of companies, I think they would have a productive conversation from this deck. I think what's really missing is just like the manufacturing side. How are they actually building this stuff out? But nonetheless, much better improvement. All right, let's go ahead. I'm going to exit out of those. So thank you, Tractor Bots. Let's go to Pineapple Square. So I believe I saw this one a little while ago. Making hospitality back office effortless with distribution and data. Okay. So hospitality solution, listing the team up front. So what that tells me immediately, if you're showing your team up front, usually you are the product that I would be investing in at this point. So if I'm a VC, probably pre-seed, maybe seed, maybe you don't have a lot of traction. So it's wise for a founder to put their team up front if you feel you have a credible stacked team ready to go. I like the swag they got there. It makes them look good, but also makes me concerned that they're spending more money on swag than getting traction. I'm not sure. But we'll go ahead and forgive them on that front. But 2 years at hotel school, so 4 years in commercial kitchen. So some relevant hospitality experience. Or you got your dev team or your developer technical lead, which is important, and designer in house. So just having a co-founder as CTO is always so helpful, and I think that's important to kind of address that. Like, okay, they got tech talent. What are they building? Especially tech landscapes, growth, limiting networking. So hospitality tech landscape is an impediment to hospitality growth. Growth to who? Growth to the like hotels, growth to bars and restaurants, limited networking and distribution opportunities combined with disjointed back office systems. I know this doesn't tell me a pain. This just is more like, I guess, limiting networking and distribution opportunities is the pain, but this is not a strong problem statement in my opinion. I kind of probably glossed over it last time. Like this shows me like, oh, lots of tech. Okay, there's so many different, fragmentation in the space. Sure. I guess you're going after restaurants here, but you're saying hospitality, which can include a much larger group of industries. So we'll hopefully figure it out for the hospitality professionals. I guess what is networking and integration problems, and for who? Is it the employee, the employer? I don't know if that's an actual pain point or more of just a missing feature that would be nice to have. Connect and collaborate with other professionals, service providers, and suppliers. Integrate all your hospitality software tools with data one platform. So I'm always skeptical of anything that does everything. Anytime a founder comes to me and says, we're going to do all of it at once, and that's why everyone's going to use us. Problem is, that takes a lot of time and money to kind of build all that up. And there usually has to be a strong enough, kind of beachhead market or approach to kind of get those initial customers in the door with some kind of smaller, easier to use, clear problem solving solution to kind of get that initial traction. Because if you have to raise a bunch of money to kind of get to the point where anyone would even use you, that's just something a lot of VCs just don't want it back. So be careful when you say you're going to integrate everything all into one. It can always be a point of contention or concern. Operate and collaborate with your team. I still don't have like a super clear idea, and I've seen this deck or a version of this deck before, so that's not good. That means it's not too memorable. It means it wasn't ultra clear before and still isn't ultra clear. Hospitality businesses, professionals, service providers. Let's see. So again, remember, yeah, I'm still like I don't see a lot of changes in this deck. I'm still struggling with kind of following with this. Um, okay, so your distribution with Connect app. So I think from again, you're helping the restaurants find professionals, and these people will come eventually. This is not a target market in my opinion. This is super broad. This is, what kind of professional? This just doesn't give me enough information, guys. You have an app store already as of, okay, just a few weeks ago, it seems. You've raised 20 grand, so very, very early, working on the cold start problem. So at least you got some good verbiage there, but I don't know what that actually means. You have 2,000 pieces of content uploaded in the app in 2 weeks. I don't know what content means. I don't know if that's important. You have 100 users. I don't know if that's substantial in this industry. Building a networking app of some kind, you're going to need to be in the thousands to have any value and high concentration. Um, this is not a competitive advantage. This this is just a list of bullets and features that you may or may not have. Competitive advantage should be like a defendable moat, meaning that it's very costly or difficult to replicate. You have an existing network effect. This does not tell me that. This doesn't give me any value here. Business model, advertising of services and products. So, so ads and transaction fees and SaaS. So again, everything concerning. So focusing on the European and U.S. market. Again, like so broad, and I don't see any particular focus. This graph again. So get professionals to build their personal brands. Which why wouldn't they just do that on Twitter, TikTok, LinkedIn, and I guess maybe it just does. I don't see like the home run solution to this product here. Um, You say network and distribution platform like 1,000 times, and it means nothing to me. Absolutely nothing. I hate being so harsh, but there still seems to be a lot missing here. You're doing a seed bridge. I guess I would call this more of a pre-seed bridge since you only raised 20K and now you're raising 300K. Also, just the dollar sign goes in the front. Well, at least US. Um, I'm going to give these guys a 2. I'm not sure what I gave them before. I think maybe between a 1 or 2. I'm still just having a hard time seeing the point of having this product in market. I'm sure the founders are very passionate about it. I appreciate their commitment to coming back and being roasted again. They're clearly hungry and want to learn and grow. But I think you guys really need to go back to the drawing board, back to the problem statement here, and kind of tell me really like why do businesses have to use this and why do professionals have to use this, and if they don't, they will be hurting and or missing out on opportunity. And I don't see it. I think this is missing a clear value proposition and a go-to-market strategy. And granted, it's super early, but you don't even make me happy about the market. I've seen so many people go into the hospitality world that get early traction and have a shot at winning. There doesn't seem to be hardly any traction at this point. Granted, you just launched, so I can't criticize too much, but I'm gonna put this out as a 2 on a rubric. So, moving on to Sansar, Gateway to Luxury. Okay. I am Suraj Gupta. So, starting with the founder. Okay, so worked at startups and giant firms, U.S., grew up in known as a textile. Okay. Textile, so maybe a textile brand. Went to UT of Dallas, LinkedIn. You can do the whole link here, but you can also just put the logo just so it's a little cleaner. Design's a little, lackluster right now. All right, problem. Suppliers are getting less price, giving up on their brand identity, and growth is dependent of big brand sales. I guess suppliers being like the textile manufacturers. I guess less price, maybe just some language there could be improved. Growth dependencies. Customers are paying more. Concern on quality due to private labeling and shopping malls accessibility. I don't know what shopping malls accessibility means, but I don't know where this is going. I'm going to keep reading and see, but I don't have a very clear idea. I imagine suppliers are not making as much money and customers are paying more, so maybe they're cutting out the middleman. All right, so creating a retail store, ooh, concerning, very concerning. Getting more price and retaining their brand identity and growth. Okay, so basically allowing private label, the actual suppliers have their own private labels and sell within their own retail store, and cutting out the department stores effectively. Doesn't sound like a very exciting venture backable business. I'm losing interest. I don't want to back a retail store in the current climate and market. So trader, manufacturer, brand liquidation, warehouse sourcing manager. This just sounds like a normal kind of like TJ Maxx or Burlington, discount store potentially. I don't know why it's luxury. So fabric quality. So they're going to do fittings as well and customized personal service. Sounds, and wow, long time to get to very little revenue. I do like seeing unit economics, but first store goal, this doesn't really excite. This is very early. This does not look venture backable. It's okay. It's focusing on India, so I can't speak too much to the market there. I'm thinking US. I don't have enough exposure to India and how the retail unit economics are there, but I would be concerned nonetheless. Also, a sum of 250 million doesn't sound very exciting, but it's not the end of the world. So I guess these are all the big brands in India or in these markets. Raising 1.5 to build out a couple of retail stores. Yeah, I'm gonna give this one a 1. It's also my personal lack of experience for the Indian market and just Southeast Asia in general. It's a retail store that doesn't seem to have any kind of exponential growth opportunity. This looks maybe like a fun small business project, work with a couple suppliers that are local in those markets. Sure, but this is not a venture backable startup, at least to what's being presented here, and it's too early to kind of tell what the real potential is. It's telling me luxury, but this deck doesn't tell me luxury, so it makes me concerned that they'd be able to deliver on a luxury experience. Your deck does speak to your ability to execute. If you talk about big design and luxury, and like if you can't deliver on that experience in your deck, what's to say you're going to be able to deliver that in your business? So this one's a 0 to 1 in my book. Sorry, I know you put yourself out there and you get some feedback, but that could be very wrong in how I'm interpreting the business. But this is my first impression, and this is what most VCs, when they look at decks, that they come in, they probably wouldn't get past the second, third slide, in my honest opinion. All right, moving on to Voy pitch, or sorry, Voy. The future of suicide prevention. Okay. So we've all been impacted by suicide. I'm not sure if this is the team founder or someone that maybe had an unfortunate incident. So I don't have context here, but powerful statement nonetheless, makes me a little concerned. Problem, lack of both effective risk identification and continuous monitoring. Got some chats. Whatever, if you considers. Yeah. And going back here, so problem, lack of both effective risk identification and continuous monitoring and support. We are treating each. So suicide's a big problem ever since the COVID-19. I think that's safe to say. Just at least from news and articles I've heard, suicides are certainly up ever since the pandemic. Mental health is big rising concern, and there doesn't seem to be the proper solutions to support those that are experiencing these issues. the cost of self-harm. So these are people that maybe are suicidal and have hurt themselves, and what the cost it leads to into the overall market. That's a very, 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 very large number. Be curious to see how that's, calculated, or what are the the assumptions here. But I get the point. We don't want people in America or across the world taking their own lives, and there's always hopefully a solution for them. To accurately predict and prevent suicide. So an AI informed suicide risk assessment that is accurate as a psychiatrist, the human and AI experience. So basically, it looks like those that might have mental health issues, or they're for friends and family that might be affiliated with someone that would, can have an app to interact with to kind of mitigate these issues. So there's a screening tool that has a high rate of accuracy according to them. Gold standard suicide risk assessment. So this is, I guess, what is already out there, but they've just built the tech to automate it as opposed to using like paper and coming into an office. Okay, platform. So here, we're kind of establishing the problem, solution, kind of walking me more through the solution. It's taking me a while, kind of showing that it works, it's accurate, so building up credibility. This is essentially what they're trying to do with the deck. Extraction prevention. So this is, their prediction that this will be the future and helping people save their own lives. So it's a $3 billion market. I'm curious as to, again, like these numbers. Is people spending money on prevention? Is it healthcare costs because of people being hurt? You have these set of numbers up here. Work loss costs. So if someone, the productivity lost if they were to pass away or to hurt themselves or be in hospital, and like number of people, so it's 317,000 and then 46,000. Okay, so these are the people. No, I guess it's just visits. So it could be multiple visits per person. So I would have some difficulty understanding what the actual model is at this point, who's paying who, and how this comes about as the market, and how you got these numbers. That would be my concern. At this point, established traction, DoD, and veteran. So this is a lot of things to review. So I guess these are the different types of customers you're working with. So you have multiple contracts already. You have a $2 million proposal submitted to reduce veteran suicides. So it sounds like a very, very noble cause that has high probability of, revenue as well. I guess this is more working with these different organizations or institutions where they pay you to implement your tech to better mitigate the potential of suicide. So, okay, now I'm following along a little bit better, but I wish you would have made that a little bit more clear as far as how you make money. I know this is kind of a sensitive thing, talking about saving lives, but also making money. So it looks like you made some money last year. Looks like you're on track for $1 million this year. And these are all the different revenue sources that are combining towards that. And then you're expecting some, pretty substantial growth over the next couple of years. These are reasonable growth metrics. You're not kind of saying you're going to be at like 100 million in 2 years. Historical is kind of showing relatively low. What I'd really like to know if I was an investor and interested in this is like, what's really spiking this? What's the assumptions driving this? But you don't necessarily have to put those answers in your deck. You want people to kind of have some interesting questions like around, okay, how are they going to do this? What's going to happen? You don't have to give your entire answer to every single thing in a deck. The deck is meant to just stoke a conversation. So you don't need to raise a ton of money. It looks like you're going to be profitable next year, which sounds great, but also discouraging for, VCs. VCs are usually looking for hypergrowth, but if you're really going to be able to service $15 million in revenue and still make 12 million in net profit, like net income, that's pretty unrealistic in the VC game, but not impossible. I just would have a strong sense of doubt, and that you're grossly underestimating the cost of scaling. But I also don't really even know what goes into scaling for you. If it's just sales and you hand over an app and that's all it is, and then if that's the case, then maybe this is very venture backable. You don't have to have a ton of revenue if it's this profitable. But then if you're raising, if you're that profitable, do you really want to be raising a ton of venture money as opposed to maybe some private money just to get over a hump? and keep more of your company. Go to market, close service contract. This is, I don't really want to read this. My personal opinion, just kind of hard to follow. I guess these are all the deals that you've closed this year as of 2023. A team, you're missing your LinkedIn profiles. I would hope that you would put your LinkedIn profiles in here. Oh, wow. Burying the business model, bury the lead here. You definitely want this to go much higher up. All right, so you're charging a coaching fee that's so $220 a month for a coach that services up to 250 members. Is that 250 members then times 229 or $229 services up to 250 members? Oh, it comes out to $8 a month. Okay, so I guess that's my answer. So it's $8 per month, and average contract size 90K. So okay, wow. All right, so very small amount per user, but 90K per month is pretty nice. Average contract size per year is 90K is not too bad. So this is, I guess, how you license it based on the number of assessments that you guys are doing. Not too familiar with this stuff. It's, again, maybe stokes a conversation for anyone more familiar with it, but I would try to probably simplify this a little bit more and also identify the difference between what's the coach, what is the app, is it a human coach, is it a digital coach? That I'm not concerned about. All right, I am concerned about. Competitors. So you have two products, Void Reach and Void Detect. Did you articulate that above? Oh, okay, you did. So this is, okay, so you have an assessment and then you have the ability to conversate. Okay, so there's two separate products that you're using and people could buy both. I'm always, when it comes to doing this, I say this in other presentations before, try to consolidate your brand into one identity and one product. You might sell different products to customers, but when it comes to simplifying your deck and making sure investors can follow along, like I was able to sort of follow along with this deck. It's not the worst, but it definitely could have been better and more consolidation of information, just kind of getting me to the point that your technology works and that people are already paying for it and that you have a good business model and that the market has high scalability. Like, just kind of give me the gist, and you can give me all the details in the appendix. You can give me all the details in due diligence. You can give me all the details in a meeting. But I just really want to make sure it's very clear to founders. Just focus on like getting across the point that you're working on something great and you got some traction behind it and you're the team to do it. Don't try to give me every single detail, across the board on your decks. It will hurt you more than will help you. But founders, I get it. You put so much blood, sweat, and tears into your business. You want everyone to know all the amazing things you've done because you've done this, and this. But when you put together your own deck, it shows that you're trying to do that, and it just becomes harder and harder to follow and read. And you got to remember, your deck doesn't get you an investment. Your deck just gets you a meeting, and that's what you should focus on. All right, so raising $3 million on a $7 million pre-money. Do you have a lead? Not have a lead? Okay, so you have a signed term sheet. You should probably say who's on the term sheet. That's a red flag. If you say you have a signed term sheet, that doesn't necessarily mean like someone invested in a safe. Well, I guess you're not doing a safe because you're doing price round, but you definitely want to highlight who your investors are. That would be mission critical. Here's a giant red flag: exit for 100 million in 4 to 5 years. You're raising on a $10 million valuation, so you're saying like best case scenario, it's a 10x exit, which VCs always discount whatever you say you're going to do. So maybe it's a 3 to 5x investment. And if you have to raise more money down the road, which you seem very profitable, maybe you don't have to. But never talk about an exit. Never talk. You don't need to. This is what the VCs do their own homework on. You don't need to tell them your exit strategy. You can talk about maybe like deals in the space, people who've raised money, just so they have some like starting ground to do their research. Maybe that supports you. Which with this, I would actually have this information. I would just leave out the exit strategy. I would just say like, other deals in the space, M&A deals and investments in the space. I would not put exit options or who you're going to sell to. That immediately detracts the typical VC and forces you more to like angel investors and private investors, limiting your ability to raise from funds. So this one, I'm going to give like closer to 3.5, before. I think there's like some good stuff here. I think they need to work on just simplifying the deck a little bit. It's also just hard for me to like read out loud on every single thing and go through it and comprehend it all as I kind of navigate these. But I don't think this is 100% venture backable just due to the scale and the exit strategy and all that kind of stuff. But I'm pretty sure there will be VCs that are interested in kind of mental health and wellness. Suicide prevention is a piece of that, and there could be some good strategics here that might be interested in healthcare and whatnot. So I think there's a place for this business to exist. I think there's a place for this business to raise money, but I'm not sure how it's currently formed. It would be 100% ready for primetime venture capital and how it's structured. So kind of more of a 3 to 4. All right, last one, Illuminote. I think I've seen this one before. So transforming legal documents for disparate pieces of paper into comprehensive digital records. So I guess transforming all the, as you see on those legal shows where they, go into the, I don't know, discovery and they drop off like 50 boxes of paper. I guess this is a way to mitigate that. Okay, so the world has been digitalized, yes, but most of our legal agreements and relationships remain stuck on paper. I don't know. I would strongly feel against that. I still deal with some people that want paper, like my, trust and will, which is frustrating. But I also have digital copies of everything, so I don't know. Must manually verify data from one off-paper document. So that sounds like there's still some legal requirements to require paper. So it's just, I think this deck does seem to trigger to be better than it was before. I have seen the previous deck. I don't have it available to show what improvements they made, but I do feel like I'm seeing a better articulation of the business problem here. Okay, lots of sectors. Sure, it takes a unique combination of legal, operational. So they have some legal expertise. They have co-founders, CFPs. So very qualified from a industry related background. Not sure if they have a technical lead. That would be the main concerning point. Don't see any technical support here. So that's going to be point of concern. Convert these disparate paper documents into comprehensive digital records. So QR codes for, I guess, notarized documents. That would be interesting. That platform doesn't look very appealing. Doesn't look much better than paper. Design-wise, I would be concerned. Not that lawyers need the best designs, but done a legal and consumer thesis and is now validating its enterprise thesis. All right, so you have 30K in consumer sales. Found development partner. Okay, so yeah, you have a development partner, so that means a dev shop. VCs hate dev shops. They sometimes will back deals that have dev shops that have already built the product and it works. But kind of pre-seed dev shop need to fund the development. Most of their money, VC money, goes to a dev shop. They don't usually like to see that. Just a heads up for all founders, listening here. Advancing the product roadmap. This doesn't tell me anything. Advancing product roadmap does not tell me anything. Yeah, you're going to build product. That's a waste of a bullet point. You don't need to tell me that. Pulling freemium consumer model. So I don't know what that really means. Sure, you're going to have a freemium model, but what does it actually deliver in terms of results and sales and growth? These are not like objectable, like quantifiable goals. Developing IP portfolio. IP portfolio of what? Is there certain IP that can't be done by anyone else? Lumina is raising 500K, so on 5 million. Straight product development. Okay, that's also, again, no one VC wants to see that 100% of their money or 75% of their money is going to some random dev shop. They want to see it going to the co-founders and building the company and scaling it and being properly motivated. It could be concerning that all of it's going to product development. It also shows that, like, how are you guys going to iterate? How are you guys going to recruit tech talent to keep this, state of the art and updated and going? Dev shops don't always deliver on that front, or it's, if you don't have a technical leader to manage that dev shop, it's also concerning. Okay. These are not actionable, enticing outcomes. It's like, show me like how much revenue you're going to generate with this money, how you're going to get to the next stage. Like, all right, you want to raise, this is your pre-seed. If you want to raise a seed round, you're going to have to be between $250,000 and like $1 million in revenue with substantial growth, month over month growth, to be able to raise a follow-on round. And you don't articulate how anything you're doing is going to do that. So that's a red flag. Don't know what this is. It's okay, quote, I guess. It doesn't help you at all. And you bury your contact information down here. I don't know. I don't, not in love with this opportunity. I don't see a technical co-founder. I don't see good execution on design in terms of the deck and materials. I don't necessarily understand the problem truly. I see that it's being said that, this stuff's a problem, but I don't, like, at least personally, I don't experience that. Like, sure, there's some things I still have to do with paper, and I hate having to like do wet signatures and whatever. But that's what DocuSign solves in a lot of ways. And you haven't shown me like the legal restriction that explains, or like, by law, these institutions have to have paper. But with our solution, it could digitize it. Like, I haven't seen that argument, if that's what you're trying to argue. So, this case, I'm going to give this guy's, maybe a 2. Maybe there's some potential here. It needs a lot of work, maybe a little bit more traction, needs to be figured out a little bit more. Maybe I could dive into these resources a little bit more, but I just don't really see why the world needs it, and that you guys are the team to do it. The fact that you guys are lawyers doesn't necessarily mean that you know how to build tech product. And that's the main concern. And that's what VCs would say to you, probably, if you haven't already, had those conversations. And you don't talk about what milestones you're going to hit to make you guys more fundable. So that's where I stand. So that's our last deck. As a reminder to founders watching us, and keep your decks focused on getting you meetings. Don't try to have anything and everything in your deck. That can often be a major deterrent. It shows you're trying too hard, you're not focused. If you say you're going to do anything and everything, or you're going to be the all-in-one for everything, it's usually a red flag to most VCs, because they see so many people try it, they never usually get it off the ground. And you have to think about it from a VC's perspective, especially in pre-seed C, which is most of what we saw today. You have to have a clear path as a company to get to that next stage. And like I said, from pre-seed to seed, you need about $250,000 to $1 million in revenue, with growth going like this, product and market, customers. Like, that's going to be a much faster way and a more successful way to raise a seed round. And VCs, the pre-seed stage, want to believe that you have a path to that point. You don't have to be already there, but you have to be believable in the sense that you will get there. And in this last deck and the deck prior, I just didn't see those stories articulated properly. So as a reminder, if you need help with the deck, or you want to bring on support when it comes to designing a deck, I recommend you reach out to Robert over at getdeco.com. If you want a private deck review session, you're maybe not comfortable having your stuff blasted on live stream, totally get it. You can reach out to me directly. Just go to my LinkedIn, click on my link in the bio, and you can book a session there. If you want to know which VCs are a good fit for you and which ones you should prioritize building a relationship with, be sure to sign up on our website at thunder.vc. Again, link in my bio, both on my LinkedIn as well as our YouTube, whichever channel you're watching on. But I appreciate everyone joining us today. I will be back again, not next week, actually. I think next week we're skipping. I'll be traveling, so I won't be doing next week. But the following week we'll be back, which, just to confirm, will be I will be on the 11th. I won't be on for the 18th. So we'll be doing it again next week. So if you want your deck reviewed, be sure to submit it. The link is in the live event descriptions, the Luma link. And, hope to see you guys on our future shows. And as always,